The most dangerous war of traders. Stock market crash. The S&P 500 fell 137 points over the week. The reason for the crash was a trader war that unfolded between small players from the community with Reddit, WallStreetBets and hedge funds. It all started with a pump of GameStop shares. The funds were short on them and were forced to sell other shares to cover losses. After that, Robinhood and other brokers began to restrict trading in stocks popular with WallStreetBets, apparently allowing hedge funds to close their shorts. As a result, the US stock market is showing record volatility, sales of high-quality stocks are underway, and the SEC promises to sort out the situation. Billionaire investor Jeremy Grantham sees what is happening as a harbinger of the collapse of the S&P 500. He believes that the beginning of the Biden presidency is a good time for the stock market to fall by 50%, and the high volatility is confirmation of this theory. At the center of the scandal was the broker Robinhood, which is largely the reason that today we see such high quotes in the US stock market. They were the first to offer commission-free stock trading. And now this model has been adopted by other brokerage companies. But it is Robinhood who are the leaders of this market, and through them many new participants have recently come to the world of investments, counting millions of people. And that's why you might often hear that stocks are so expensive, because they are thoughtlessly bought out by the Robinhood army. But any medal has two sides, and a company with such a symbolic name turned out to be not at all a kind robber. In fact, they simply cheated their customers. First, it became known that Robinhood was selling information about its clients' transactions to other market participants. That is, a rich manager of a large hedge fund is sitting somewhere. These are funds whose goal is to overtake the market and get higher returns. And then he receives a report that people began to massively buy up such and such shares, or, conversely, sell, and he can immediately enter the market and take a part of his profit on this movement. And since he has a lot of money, it is possible that he will act like a hardened speculator and play against the crowd. Simply put, it will take money away from newcomers with Robinhood. These juicy details of the online broker's work were revealed in the middle of last year, but users did not attach much importance to them. Another scandal around Robinhood began in December 2020, that is, quite recently. They paid a $65 million fine to the US Securities and Exchange Commission for defrauding their clients. It turned out that the so-called commission-free trade was just an advertising stunt. The broker did not charge it himself, but it was embedded in the value of the securities. That is, the clients of the platform bought shares at an inflated value, and the market maker then returned this difference to Robinhood. But this was not enough for the guys from Robinhood. By the way, they were actually forgiven again. Now they have shown that they are openly playing on the side of big funds when they began to restrict trading in stocks, which were dispersed through the trader community on Reddit. The company itself states that it is acting in the best interest of its customers. S&P 500 Index. The markets were promised incentives. The head of the Fed calmed them by continuing to print $120 billion a month, and they went and fell. But this was not the case with all stocks. GameStop and a number of other stocks, which should have been falling due to the deplorable state of their business, flew into space. They were actively bought up by private traders. Many of them worked through Robinhood, and they coordinated their actions on one of the Reddit subforums. It is unclear whether it coincided or someone leaked an insider story that large funds are short in these shares, but in fact they began to rapidly lose money. Here it should be clarified that when you open a long position, then your maximum loss can be 100% if the stock falls to zero. But if you became short, it is a short position, and prices, on the contrary, are growing, then on such a transaction the losses can be 200% or 500% and so on ad infinitum. To keep short positions and not fix these huge losses, hedge funds began to sell other stocks. They simply needed cash. And this was the reason for the fall in the S&P 500 index. And then even more interesting, Robinhood has officially stopped trading these shares, ostensibly in the interests of clients. In fact, they enable hedge funds to dump these securities and minimize their losses. Although private traders don't give up and are looking for other opportunities to pump their favorite stocks. This is a whole financial war and a huge precedent for the markets when small players were able to unite and break the plans of big wallets, showing that thanks to the modern conditions of trade and communication, small speculators can act as a united front and cut hedge funds. Robinhood will face lawsuits for market manipulation. Their plans to go public are now in doubt, and it is possible that many traders will refuse to work with the platform. But the main one is